Welcome to Frederick County Department of Aging and the services and activities that we can provide you with. Our guests today are Diane Fox with the Frederick County, she's the director of the Frederick County Treasurer. We have Daniel Lewis with us, who is our Treasury Manager, and we have Vicki Thomas from the Maryland Department of Assessments and Taxation. These are our experts today, and they'll be able to help you with any of your questions, and we look forward to having their expertise. I would like to introduce to you the Frederick County Board of County Commissioners President, Mr. Blaine Young. He was instrumental in helping us with this program. Mr. Young.
Thank you all for being here. I just want to stop by and say a couple words. First, this putting in place the senior property tax credit was one of the pledges and goals of this administration. This is something that has been talked about for a long time. I think probably dates back to about 2005 when it was first talked about. We figured a lot of people would be excited about this and a lot of people would take advantage of the senior property tax credit. To date, over 477 seniors in Frederick County have applied and taken advantage of this. It is available until September 1st, and we are very excited as a Board of County Commissioners that we're not having one seminar today and workshop, we're having 3. So by popular demand and by so many requests, we will have 3 seminars today to tell people about this. Now, we know it's not perfect, but we had to start somewhere. So we do know that when the committee presented it to us, it was a starting point. We know that going forward, there's going to be some tweaks and changes that have to be made, especially when you look at assets and gross incomes and things of that nature. So we do want feedback as much as possible because one of our goals is you've probably heard that one of our goals is making Frederick County as business friendly as possible, and one of the most business friendly counties they are. But also, we want to make Frederick County as senior friendly as possible and make sure Frederick County is kept a place that's affordable to live, and also that seniors do not have to choose to leave our county, as we're in an unusual situation in a lot of counties because Virginia is our neighbor. We border Virginia, we border West Virginia, and we border Pennsylvania. So please give us your feedback. We want your feedback as we look to expand and tweak this program. And I thank you very much for coming today, and hope you enjoy the seminar. Thank you.
Good morning, everyone. Good morning. I'm Diane Fox. I'm the Director of Treasury. And what we're going to talk to you today about are tax credits that might be available to you as seniors in Frederick County. I'm going to start off by just describing the Treasury Department a little bit. We are located at 30 North Market Street, right in downtown Frederick. Some of you might know it as the old Fredericktown Bank building, right on Market Street. We've listed our number, also our email address if you'd like to email us any questions, and our website. We're open from 8 to 4 Monday through Friday. We do have extended hours one night a week on Wednesdays until 6. We do have a drive-up window that has been very popular. We can take all payments, assist you at the window. You don't even have to get out of your car. We do have parking, though, behind the building if you'd like to park and come in. Okay, the Frederick County Treasury Department, we're most probably well known for issuing the property tax bills and collecting payment. We also do other things. We collect recordation taxes. We collect landfill, water sewer, invoice payments, fees for permits. We can give you transit bus passes if you purchase them. You can get your dog and cat license at the Treasury. And another popular thing that we do is we do renew your MVA registrations. There's a $2 fee, but you don't have to wait for an hour. And the MVA, of course, is no longer doing that in person.
What is MVA?
Motor Vehicle Administration, your vehicle registration. Okay, we also provide cash management and fee analysis services for the entire county. We also manage the county's investment program. We do the investment of all the county funds. We are the merchant card administrators, which are the credit cards and debit cards. We administer all bank-related services for the county, and we handle all invoice billing for the entire county. We work very closely with the State Department of Assessments and Taxation. They are located out on Spectrum Drive, which is behind the Francis Scott Key Mall. There's their phone number and their website address. Their hours are 8 to 5, Monday through Friday. The State Department of Assessments and Taxation is responsible for the valuation and assessment of property. They're the ones that actually assess the property. They send that information to us. We apply the tax rates and send you your bill. Properties are reassessed once every 3 years, and you would receive a notice in the mail after that was done. Another very important thing the state does, and more pertinent to what we're talking about today, is they administer the various exemptions and tax credits that are available to you as property owners, including the state homeowner tax credit, the county supplement, and the senior citizen enhanced county supplement, which is, of course, come to be known as the senior tax credit. What I'm going to do first is walk through the state homeowner tax credit. This form has to be completed to be eligible for any of those 3 credits. So we'll go through that first, and we'll go through the form a little bit, and then we'll go into the other 2 programs. This program was developed by the state, and it allows credits against your homeowner's property tax bill if your property taxes exceed a fixed percentage of your gross income. You must own or have legal interest in the property. It must be a principal residence where you live at least 6 months of the year. Your net worth, not including the home, or qualified retirement savings or IRAs must be less than $200,000. So again, you do not include, your asset limit does not include the home you live in, okay? You have to report your combined gross income, and that's gross income of everyone in the household, your spouse, anyone else who is living in there that is not paying you room and board. You do not, of course, have to report dependents if you have a grandchild that you're raising or something like that. Your income, that gross income, cannot exceed $60,000. The credit is only available on the first $300,000 of the property's assessed value, and the form must, I don't say it here, but the form must be completed on a yearly basis. And you do have to include, as an attachment, your copy of your tax return or other verification of your income. Obviously, I don't expect you to read this. I just wanted to show you the actual instructions for the form. We do have forms available for you over here. And you can just see it does go into some detail on the form, and it shows the phone number for the Baltimore office where you can call. You can also call the local state office in Frederick as well if you have questions. All right, let's take a look at the actual form. This is the first page of the form. And basically, this is where you would complete your name, your social security number, your birth date, your daytime phone number. You would put your spouse or a co-owner living in the property and their information as well, and then the property address. The next page is the actual start of the income form. And it's just going to basically ask you some questions. Do you own any other real estate in Maryland or elsewhere? Do you operate a business in the home? When you reside in the property, have you resided in the property for the 6 months? Okay. If there's any residents in the property, you need to list their name as well and their relationship. And then there is a place that if you maybe have a boarder, someone who rents a room from you, you would put that information there. And then it asks you, is any part of it being used for farming, business, and or rental purposes? And that would assist the state in finding out how much of that credit it actually would apply to the home versus the business. And then if there's any apartments or anything that are in the home. Okay, then we go down to the actual income portion. And this is where you would list your sources of income, your spouses or the resident co-owner sources of income, anyone else living there. And this is basically all your income. You list your Social Security, you list dividends, any unemployment, any retirement. You basically have to list all income at gross for the calendar year. And then, of course, you would complete, if you do fill a federal income tax return, you would complete yes, and then sign the form. Your spouse does have to sign the form as well. And then they list the address to mail it to. You can drop it off, of course, to our local SDAT office. If you drop it off to Treasury, we will make sure it gets to the local SDAT office for you. Okay? The county supplement has been in place for a number of years. To get to the county supplement, you do have to fill out the homeowner tax credit application with the state. The county supplement was offered for Frederick County as a supplement to the state homeowner tax credit. The idea was we wanted to help a little bit more. The county supplement has no age limitation. This is not the senior tax credit. It's just one step in getting to the senior tax credit. Okay. It's, again, administered by the State Department of Assessments. They administer that for us. There is no income ceiling. It follows the net worth limitation and assessed value cap of the state. In other words, your net worth can't be more than the $200,000, not including your primary residence. And the assessed value is the $300,000 limit, okay? And it's based upon the amount by which the property taxes exceed a percentage of income. And there's a formula that's going to flash up there that this is basically the formula that would be worked through to figure up, based on your income, how much taxes could you afford. And if the amount of the supplement is the total county and fire taxes, less whatever comes up out of this percentage of income calculation. Okay? So in other words, say your taxes are $1,000. After we take your income through this calculation, we think you can afford to pay $500 of those thousands. Based on your income, we're going to give you a $500 credit on the county supplement side. Okay? Again, this is not age-based. This is for anyone who completes the homeowner property tax application form. This has been in place for a number of years. Just recently, as Commissioner Young mentioned, we do have the enhanced county and supplement. We enhanced it, we enriched it for the seniors in Frederick County. And it's the new senior tax credit. It was enacted by the BOCC and was effective just this past July on the July tax bill. This one does have the age requirement. You must be at least 65 years of age. Gross income of the household, again, must be $60,000 or less. In order to get to the senior tax credit, you must apply for the state homeowner tax credit, and you have to qualify for the senior supplement in order to receive the senior tax credit. Okay? And the actual amount of the senior tax credit is a little bit simpler calculation. It's 20% of your net county taxes, up to zero. Okay? So if your net county tax is at, maybe you've gotten a homeowner tax credit, a supplement, then we're going to net that out and we'll take what's remaining, and it would be 20% off of that amount. And we're going to go through some examples in a little bit that might be able to better show that. Okay, and there's some examples here that Dan's going to walk through for you. And again, if you have any questions, please don't hesitate to ask. We have no problem stopping, but there is room for questions at the end.
Thank you, Diane. My name is Daniel Lewis. I'm the Treasury Manager for Frederick County. We're going to go through a number of examples today of actual homeowners in Frederick County that currently receive some form of a tax credit, either the state, county, the senior tax credit, or all of the above. Our first example is an individual that received all three tax credits. They received the state homeowner tax credit, the county supplemental tax credit, and then the new senior tax credit. This homeowner was 65 years old or older. Their gross income was $44,510. Based on the different calculations, they received different portions of tax credits based on the different calculations that we're going to go through. I know this slide's a little hard to see, but all of the yellow areas in here are the different areas that the county fills out in order to determine which amounts you get or you don't get to qualify for a tax credit. This first slide is applying those previous elements to the state homeowner tax credit formula. And if you look on the right-hand side of your screen, you'll see the chart that the state uses to take your income and break it down into how much taxes they feel you can pay on your own. So that for the first individual, you're charged $0 for your first $8,000 of income, $40 for the next, for the next 1,000, $80 for 10,000, and so on. In this example, the $44,510 of gross income, the state has determined that this individual can pay up to $2,985.90 in taxes. Those taxes include the county property tax, the state property tax, any county fire tax, and any municipality tax. So the state looks at it as a global tax, whereas the county is a little different. In this example, if you look down here, you'll see that the actual charges that this customer received on their tax bill were $3,224.59. Since that amount exceeded what the state felt was eligible to be paid by the customer, they kicked in the state homeowner tax credit, which ended up being $238.69. So the state sees that, okay, you were eligible to pay the $2,985. You paid $3,224. We're going to give enough money to make that down to $0. The next slide shows us the county supplemental and senior tax credit breakdown and what we use to determine how much you're eligible for. Again, this individual received all 3 tax credits, so this is a unique situation, but it does happen. On this part, the county uses a different income breakdown, and that's on the right-hand side, up at the top. For the first $9,000 of your income, you receive, there's 0 tax limit on there, 0% tax limit. For the next 1,000, there's a 5% income limit. The next 2,000, there's a 2.5% income limit. The next 4,000, there's a 5% income limit. The next 28,000, 7.5%. And then anything above 44,000 is 10%. So we'll break this down to show you how the $44,510 is broken down into a taxable limit on the customer. Since there's a 0% tax limit on the first 9,000 of the income, there's $0 that we assume that you cannot pay any taxes if you have 9,000 or less. For the next 1,000, we assume that you can pay 5% of that, which equates to $50. And I'm referring to everything up in this top left-hand corner. The next 2,000 after that, so anything up to 12,000, we assume you can pay 2.5%, which is an additional $50. Up to 16,000, we assume that you can pay 5% of that, which equates to $200. The next 28,000, again, is a 7.5%, which in this case comes out to $2,100. And then since this person fell into the next range, anything above the 44,000, their next $510 falls into that final category, which is the 10%. So that equates to the $51. Overall, based on this person's income, we've determined that they can pay up to $2,451 of their own taxes before any type of county supplement can kick in. Moving on to the next set on this page, the total taxes, county taxes that were paid, that includes your county property taxes and your county fire tax, that totaled $2,917.49. So if you move over to the right-hand side, $2,917.49, we take out what we estimate you can pay, less any type of state credit you receive. So if the state helps you in any way with a state homeowner's tax credit, that gets deducted out before we net out your calculation. In the end, this person was left with a net difference of $227.80. That becomes the county supplement, just like the state's supplement, to get you to net to $0. And then finally on this one, we entered in the person's birth year, to determine whether or not they're eligible for the senior tax credit. And on the senior tax credit, it's only eligible for county property taxes. It does not include the county fire tax on that calculation. So we took the county property tax amount, referring to the bottom corner here, $2,566.51. We take out the state's supplemental credit, the county supplemental credit, and we're left with a net county property tax of $2,100.02. We take 20% of that, and we come up with $420 as the senior tax credit. I know it's a lot of numbers, but it works out. The next example we're going to go through is a person that received both county credits. Yes, sir.
We don't do these calculations.
We'll handle those. Yes, if you contact our office. Right, you fill out the form and send it to the state, and then they'll determine whether or not you're eligible for the programs. And then if you're waiting on a decision from the state, we can still calculate that out for you.
Form for all three.
Yes, sir. Yes.
Thank you.
Sure. Yeah. So this one is the person did not receive any state help, but they were eligible for the county credit and the county supplemental credit and the county's senior tax credit. They were over 65 years old. Their income was $50,965. They ended up receiving a county supplement of $95.50 and a senior tax credit of $542.50. So in this example, we use the same formulas as before, the same state income chart. The state determined that they could pay up to $3,566.85 on their own before any state credit kicked in. Now, in this example, the person's assessed value on their property was $365,000. The credits are only good up to the first $300,000 of the assessed value on your property. So only $300,000 is used in the calculation to determine how much taxes you actually paid on your property. If you look down a little bit, that ended up being $3,528. And since that was less than the amount that the state felt that they could pay on their own, they did not receive any type of state homeowner tax credit. Now, since the county uses a different formula, you can be rejected on the state level but still be eligible on the county level. And that goes both ways. You might be eligible for the state but not eligible for the county based on how everything rolls down. So using the county's formula, we determined that the gross income of $50,965 allowed this individual to pay up to $3,096.50 on their own before any supplemental or tax credits would kick in. This person, if we look at their county property tax and their county fire tax, they ended up paying $3,192, which was more than what we thought they should pay on their own. So they ended up getting a $95.50 county supplemental tax credit, and that automatically allowed them to be eligible for the senior tax credit, which ended up being $542.50. Yes?
Are you saying that this form for the state of Maryland, the homeowner's property tax thing, we just fill that out, send it in, and they will ascertain all these other things?
Yes, ma'am. One form will take care of all three tax credits. The state will determine how much, if any, state credit. They'll also determine if you're eligible for a county and the senior tax credit. The state administers all three of those credits.
What if one has already paid tax?
You can get a refund if you've already paid your taxes and the state comes back later and says you're eligible for some type of tax credit relief. We will refund that money to you.
So basically, we just have to fill this out.
Yeah. All right, the last example we're going to go through is the one that we typically see. It's where somebody receives help from the state, but because the state gives them so much help, they end up not getting any county relief. And since you don't get any county relief, you don't get any senior tax credit relief. This individual was over 65 years old. Their gross income was $22,944, and they ended up getting a state homeowner tax credit of $1,113.62. So going back and using our charts that we've used before, the state determined that this individual could pay $1,044.95 on their own before any type of help was kicked in. Based on the numbers that they actually paid of $2,158.57, the state issued them a $1,113.62 tax credit. So they got the state credit. Because the state credit is calculated in the net county taxes, we determined that this individual, at their current gross income, could pay up to $820.80 on their own before the county would kick in any supplement. In reality, they paid $1,689.61, but when you net that with the state homeowner tax credit that they received of the $1,100, they did not qualify because that had brought them under that $820 tax limit. And because they were not eligible for the county supplemental tax credit, they were not eligible for the county senior tax credit. As Commissioner Young pointed out earlier, this program has been rolled out to almost 500 properties in Frederick County so far, and totaling almost $117,000. We know it's not perfect. It's just a start. But we're looking for areas to improve on. So if you have any suggestions for us or any questions or comments, we'd love to hear them from you. Thank you for your time.